Hi everyone, today I'm talking about record keeping, paperwork and things that you need to keep and things you don't need to keep, because I quite often get asked about this and I thought it might be quite useful to put it out there so that people know what they should and shouldn't be doing. So paperwork, so much stuff these days is going electronic, which means that you don't end up with half a tree stuck in a cupboard that you don't use. But days gone by wasn't always like that. People typically got pay slips that came as paper. People got bank statements, and if you're not careful you can end up with a whole stash of stuff that you never know if you're going to use and just takes up room that you could be using for other more exciting things like shoes or handbags or whatever takes your fancy. So what's the rule with keeping paperwork? Well, the rule is there is no rule. That's the key thing. So if you are looking at something like pay slips and you're an employee and you work for a company, then at the end of each year you will be given a P60. That is a summary of what you've earned over the year, what you have paid tax, what you've paid in other allowances and things. It has things like statutory maternity pay and statutory sick pay and things like that on it. Those do say at the top of them in big letters, do not destroy. Now those are important to keep them. How long you need to keep them, how long's a piece of string. If you've got room for them, keep them indefinitely. Put them in a cupboard, you never know when they might be useful. Where they are useful typically is when you're applying for borrowing, so if you were looking for mortgage lending or other types of borrowing, because it shows not just what you're earning this year but historically what you've earned. So if you need to prove that you have a basic income plus bonuses or commissions or whatever that are consistent over a number of years, then the lender will ask for 2, 3, 4 years worth of P60s to show that what's on your pay slips now is an accurate representation of what your financial situation is really. In terms of pay slips, you really only need to keep the current year's pay slips, because once your P60 has come round and arrived, it normally arrives May, June time, depending on your employer, and it shows the earnings for the last financial year. So the last P60 that you should have if you're an employee will take all your earnings up until April this year in 2017. So you only need to keep pay slips from April this year onwards. So probably April's pay slip and May if you haven't already been paid in June. Now, the only caveat to that is if you are likely to be getting a mortgage in the next 6 to 12 months, you might want to keep last year's pay slips, especially if you've got any bonuses or overtime that were unusual that you want to be able to show what they were. You can quite often get copy pay slips from your employer, but it's a bit of a nightmare and paperwork wise can be a bit of a headache. So that's that. So maybe a folder with your P60s, year's pay slips. Everything other than that you can get rid of, stick it through a shredder. Try not to just put it in the dustbin because in terms of financial fraud and theft, you don't want your identity cloned from people picking up junk that's come out of your bin. Things like bank statements are slightly different. Most people with bank statements and things, it's a good idea to keep the last 6 years if you can. Now, if you're somebody who's now gone paperless, that's great. It means that if you do need a paper bank statement for something, you can have one free copy by post, but it does mean that you can print bank statements off whenever you need them, which for a lot of people is more flexible. So if you've got older bank statements than that, then yes, I would keep the last 6 years because it does prove money going in, money going out, and it's quite useful to have a record of transactions like that. I would also keep the last statement or closing statement of accounts that you've finished, especially if they had a credit facility on them. So if you had a credit card and you've paid it off in full and closed the account, keep the last statement that shows that you've paid it off, the balance is zero and the account is closed. It just means further down the line, if you need to dispute anything on your credit file, you have got proof that you paid it off. And sometimes, you know, it can be useful for other things. I found a few years back that I had an old bank statement for a graduate account I had that had an overdraft facility on it. And when I went back and looked at it, I realised that actually there was a PPI thing that was coming out of the account, and I was able to make a claim on that. Now, if I hadn't kept the bank statement, I wouldn't have had any proof because it was more than 6 years old. So it was quite useful. So try to keep those if you can. Other than that, self-employed paperwork. So if you are self-employed, you will need to fill out a tax return each year. These are done online now. There isn't a paper-based option for people. So you can get historic records by logging into the HMRC gateway, and you'll be able to access those for as long as you need them. Paper-based accounts and things like that, it's good to keep the last 6 years. Again, it's worth having in case HMRC come back at some point with a tax investigation, because if they query something on it, they will want to see what happened in previous years and that type of thing. Now, this is even more important if you are unsure about things that you have claimed on your tax return. So when you are self-employed, you can claim various things as expenses against your business. If there is anything you have claimed that you are unsure whether you should have claimed it or whether you should have claimed the full amount, then you should definitely keep your records for as long as you possibly can, because in the future, if HMRC decide that something you've been claiming, for example, you've been claiming your broadband use and they decide for whatever reason that you're not allowed to claim that, they will assume that you have claimed that off your tax every year that you've been trading, whether you have or not. And if you can't prove otherwise, then they're going to give you a bill retrospectively based on that. So always worth keeping your paperwork if you're self-employed. Your accountant won't necessarily keep copies of it. Now, in this day and age, if you don't want to keep hard copies, most people have got access to a scanner. You could scan it up, keep a PDF copy saved on your computer. Ideally, then you want it backed up to some sort of cloud server that's secure, so that if your computer gets stolen or it breaks, that you've still got your data. So there we go. So that's the most important things. Obviously, other than that, it very much depends on the circumstances. If you've got paperwork kicking around, especially if it's a financial nature and you don't know whether you need to be keeping it or not, give me a call, ping me an email, we'll have a chat, yeah, we'll go from there. So have a great weekend and I'll speak to you soon. Bye.